Imagine this. If you had invested just $1 in Bitcoin back in 2010 today, you would be a millionaire. Onto the world. It's called Bitcoin, and it's about to shake up the financial world in ways no one could have anticipated. With no physical form, no government backing, and no central authority controlling it, Bitcoin was a wild card in the realm of finance. Yet, its decentralized nature and the promise of transparency attracted a small, dedicated group of early adopters. They saw something in this fledgling currency that others didn't. And boy were they right. In 2011, just 2 years after its inception, Bitcoin hit its first significant milestone. Its value reached $1. This may not seem like much, but remember, we're talking about a currency that was virtually worthless when it was launched. Fast forward to 2013, and Bitcoin is making headlines again. This time, it's because the value of a single Bitcoin has skyrocketed to $100. It's an incredible feat, especially when you consider that many people initially dismissed Bitcoin as a passing fad. Then, in 2017, another milestone is reached. Bitcoin shatters expectations by reaching a value of $1,000. It's a momentous occasion, signaling Bitcoin's acceptance into the mainstream. And who could forget 2021? In this year, Bitcoin's value reached an astounding $60,000. It was a remarkable achievement, one that cemented Bitcoin's place in financial history. Bitcoin's past performance has been nothing short of phenomenal, but what does the future hold? Bitcoin's price has been on a roller coaster ride, but why is it so volatile? The answer to this question lies in a few key factors. First up, the limited supply of Bitcoin. There will only ever be 21 million Bitcoins in existence. This scarcity can lead to significant price swings as demand increases or decreases. It's a classic case of supply and demand economics with a finite resource and a fluctuating market. Next, we have speculative trading. Bitcoin, being a relatively new asset class, attracts a lot of speculative trading. People buy Bitcoins not because they need to pay for things in Bitcoin, but because they expect the price to go up. This speculation can cause extreme price volatility as traders rapidly buy or sell Bitcoins based on their predictions of future market movements. Then there's regulatory news. Governments around the world are still figuring out how to deal with Bitcoin. When a government announces a new policy or law that affects Bitcoin, it can cause large price movements. For example, if a major country announces a crackdown on Bitcoin, it could cause a price drop as people fear the worst. Conversely, positive regulatory news can cause a surge in price. But here's the thing about Bitcoin's volatility. While it can be a source of risk, it can also be a source of opportunity. For traders who are able to predict these price swings, there's the potential for big profits. Of course, this is easier said than done, and it's important to remember that trading Bitcoin is not for the faint-hearted. Moreover, volatility is not unique to Bitcoin. Traditional markets also experience volatility, albeit not to the same degree. Stock markets, for example, have their own booms and busts, and commodities like gold and oil can see significant price fluctuations based on global events. But in the world of Bitcoin, these price swings can be much more dramatic. This is why it's important to understand the inherent volatility of Bitcoin before diving in. As the old saying goes, don't invest more than you can afford to lose. So, understanding this volatility is key to predicting Bitcoin's future price. To predict the future, sometimes we need to look to the past. Indeed, in the world of Bitcoin, past trends often provide us with some fascinating insights. One of the most intriguing aspects of Bitcoin's history is its 4-year cycle theory. This theory suggests that every 4 years, Bitcoin experiences a significant price surge, followed by a period of consolidation. It's no coincidence that these cycles align with Bitcoin's halving events, which occur approximately every 4 years. During these events, the reward for mining new blocks is halved, resulting in a decrease in the supply of new Bitcoins entering the market. As supply decreases and demand remains constant or increases, the price naturally goes up. Let's take a trip down memory lane. The first halving event occurred in 2012, and shortly after, in 2013, we saw Bitcoin's price surge to a then all-time high. The same pattern occurred in 2016 with the second halving event, followed by the unforgettable bull run of 2017. The third halving event took place in 2020, and again, about a year later, Bitcoin reached unprecedented heights, setting a new all-time high in late 2021. It's clear that these halving events have had a significant impact on Bitcoin's price, leading to these 4-year cycles of growth and consolidation. However, it's crucial to remember that past performance does not guarantee future results. While these patterns are compelling, they are not foolproof predictors of future price movements. Many other factors such as regulatory changes, technological developments, and broader market conditions can also influence Bitcoin's price. Yet understanding these past trends is a key part of developing an informed perspective on Bitcoin's potential future movements. By recognizing these patterns and understanding the impact of halving events, we can gain a better understanding of the forces that have driven Bitcoin's price in the past. With these trends in mind, we can begin to make some informed predictions about Bitcoin's future. So, what's the million-dollar question? Where will Bitcoin be in 2024? As we plunge into the realm of forecasting, it's crucial to remember that predicting the price of Bitcoin, or any other cryptocurrency for that matter, is as much an art as it is a science. So let's dive into some possible scenarios for Bitcoin's price in the year 2024. First, let's consider the bullish predictions. Based on historical trends and market analysis, some experts argue that Bitcoin could reach dizzying heights. They believe that Bitcoin's limited supply, coupled with increasing demand and adoption, could propel its price to an unprecedented level. Some even speculate that Bitcoin could hit the $200,000 mark or possibly even higher. However, it's also important to consider the bearish scenarios. There are those who believe that regulatory pressures, technological challenges, or even a shift in market sentiment could cause Bitcoin's price to fall. These analysts suggest that Bitcoin could potentially drop to a low of $20,000 or even less. And then, there are the moderates, those who believe Bitcoin will neither soar to the stratosphere nor plummet to the abyss. They predict a steady but gradual increase in Bitcoin's value, suggesting that it could hover around the $50,000 mark by the end of 2024. Regardless of these varying predictions, one thing is clear: Bitcoin is likely to remain a significant player in the financial world. Its unique combination of decentralization, security, and digital scarcity makes it an attractive asset for investors and a potential game-changer in the world of finance. In conclusion, the future of Bitcoin is as unpredictable as it is exciting. While we can analyze trends and make educated guesses, the world of cryptocurrency is full of surprises. So, whether you're a bull or a bear, it's important to stay informed, flexible, and open to new possibilities. While these predictions vary, they all suggest that Bitcoin will continue to play a significant role in the financial world. So, should you invest in Bitcoin? That's not a simple yes or no question. As we've seen throughout this video, the world of Bitcoin is a thrilling yet unpredictable journey. It's like riding a roller coaster, with its highs and lows, its twists and turns. But, like any ride, the thrill comes with its share of risks. We've talked about Bitcoin's past, its volatility, and how past trends have shaped its current state. We've speculated on what Bitcoin's price might look like in 2024 based on these factors. But these are just speculations, educated guesses at best. Nobody can predict with absolute certainty where Bitcoin will stand tomorrow, let alone in 2 years. Bitcoin's potential for high rewards is certainly enticing. Its past performance has shown that it has the ability to yield substantial returns. However, it's equally important to remember that the cryptocurrency market is volatile. Prices can skyrocket, but they can also plummet. Bitcoin's history is a testament to this. Investing in Bitcoin, or any cryptocurrency for that matter, is not a decision to take lightly. It requires thorough research, understanding, and most importantly, a consideration of your own risk tolerance. Are you comfortable with the idea of possibly losing your investment if things don't pan out as you hope? And remember, while Bitcoin is a significant player, it's not the only cryptocurrency out there. The crypto market is vast and diverse, offering a range of options for potential investors. Diversification can be a good strategy to mitigate potential risks. So, before you decide to jump on the Bitcoin bandwagon, take a step back. Do your homework. Understand the market dynamics, the potential risks and rewards. Consult with financial advisors if needed. Make sure you're making an informed decision, not just following a trend. Remember, the future of Bitcoin is as unpredictable as it is exciting. Stay informed, stay safe, and happy investing.